principles that will guide us, but we're going to have to see meaningful reductions in things like positive test results and, more importantly, hospitalizations. The positive test results piece is a little bit squishy because we're testing, I think we're the fourth highest tested state in America. We've come from nothing to there, but we still don't have the answer to the question of what's the denominator. We do know on hospitalizations, you know for sure if somebody's in the hospital, why they're there. So we need to see meaningful reduction of those curves, and God willing, they'll come in the next several weeks, but we're not there yet.
I believe what I was reading over the weekend suggested that in New Jersey, at least, I think something like 43% of the tests that are given come back positive. And that number, I think, has to come down to closer to 10% before we can feel like we're actually doing adequate testing. Is that correct?
Well, like everything else with COVID, it depends on who you ask. But the key thing for the 43% is that we have tested overwhelmingly, because we had limited supplies from the federal government, we've tested overwhelmingly symptomatic folks. So that number is disproportionately higher than any estimate of what the general population would look like. And that's an important footnote of that number. So if you were testing asymptomatic and symptomatic, and we hope to be able to do that sooner than later, we're going to need to at least double our testing capacity until we feel comfortable that we've got the system in place to start to reopen. And you include asymptomatic folks, that percentage positive is going to go down dramatically.
Governor, you've canceled school through May 15th here in this state. Traditionally, our schools go till the 20-something of June. Do you think reasonably that there is a chance schools will be back in session this year? And by this year, I mean
there
this
is a chance. Yeah, there is a chance. We've not made that decision. We have tried to take this in bites. We wanted to have as much information at our disposal as possible. And so, as you're right, absolutely right, we've canceled in-person schooling until at least May 15, and we'll give guidance before May 15 as to where we see the rest of the school year. But is there a chance we could get back in some new reality? This is all going to be a new norm, including what school looks like, distancing, whether or not you have general assemblies. My guess is you don't. Do we encourage face coverings, etc.? Those questions are to be determined. But yes, there is a chance that we could get back in school.
I've also heard that we have about 4 to 6 weeks of revenue still on hand before the state starts to run out of cash. I know you've had some disagreements with the federal government on the money that has been allocated and what it can be spent on. What are your biggest complaints about the restrictions around what this money could be spent on and what you think it should be spent on?
Yeah, so we're probably not unlike a lot of American states. I might add both red and blue, but we're running short. We're at the front line. Our costs are going up, serving folks who have lost their jobs, small businesses that have been crushed, folks who are in the healthcare system, etc. Our revenues have fallen off a table. So a couple of things. The CARES Act, we're still trying to find good common ground as to how we can spend that money. I had a good conversation at the end of the week with Secretary Mnuchin. His team and my team have been at it over the weekend. We're still not there yet, but how that money is interpreted, for instance, your entire education system has been transformed because of COVID-19. Your entire public safety reality has been transformed. We believe those are eligible costs that need to be addressed. So there's one piece of this is, how do we interpret the CARES Act? The far bigger piece is going to be that we need a lot more federal assistance. Senator Menendez in our state and Senator Cassidy in Louisiana have co-sponsored a bill that would bring $500 billion in direct cash assistance to states. That's exactly what the doctor ordered. With all due respect to Senator McConnell, whose comments about bankruptcy of states I found irresponsible and wrong. The alternative is not bankruptcy. The alternative is we will gut the living daylights out of the very services that our folks now are desperately relying upon in what is the biggest healthcare crisis in the history of our country. So we need federal help, not only interpretation of the CARES Act money, but we need a lot more money, direct cash assistance coming from Congress and the president.
Meaning what? In 4 to 6 weeks, when we run out of money here in the state, you won't be able to pay teachers, you won't be able to pay firemen, you won't be able to pay policemen. What are you talking about?
Yeah, that's exactly what I'm talking about. Now, God willing, we'll be able to both interpret properly the CARES Act disbursements, and we'll get another big slug out of the feds. But that's the sort of Armageddon that we're looking at. And I don't say that with any amount of joy. That's exactly the wrong thing we should be doing, but we'll have no choice.
Hey, Governor, I completely understand what you're talking about with these payments that need to go out and those people on the front lines and those who are taking care of our kids in particular to make sure that they're still learning. But there have been some piggish examples from other states. Illinois, the Senate president there sent in a note requesting a huge amount of money, including $10 billion, to bail out their underfunded pension plan. And that seems a little ridiculous when you start hearing about issues like that. We have our own underfunded pension plan here in New Jersey. Is that something that you would ask money for? What do you think about Illinois' move to do just that?
No, listen, I got elected to fix the economy, both to make it grow again and make it fair again. And we had spent over 2 years stabilizing just the sorts of things you're asking about. We've made historically high pension payments. We had historic high surpluses and rainy day funds. We had things going in the right direction. and to quote the immortal Mike Tyson, everybody's got a plan until you get punched in the face. We've been punched in the face. I'm not looking for help for stuff that we were already working on, that we had inherited, the structural deficits that had been building up in New Jersey for decades, in particular in the last administration. That's not what we're looking at. I'm looking at revenues that have fallen off the table. I'm looking at expenses to deal with the unemployed, the folks in the healthcare system, the small businesses that have skyrocketed. That's explicitly what we need help with.
You are also working with other governors in this region. I think 6 or 7 states have kind of banded together, including New York, Connecticut, New Jersey, Maryland, to try and figure out what's going to come next, Pennsylvania. What are you hearing from those governors, and are there parts of that alliance that would like to open sooner than others?
Yeah, it's a very good group. It's from Massachusetts down to Delaware. In the relationships that are the dearest to us are the ones clearly who are our neighbors, none more so important than New York and Governor Cuomo. We had coordinated as an informal matter in closing our economies. It occurred to us, hey, why not put a little bit more formality around a regional council as we look to take the steps to reopen. In fact, there's a meeting going on of the council right now. I don't think you'll see us taking, in each case, identical steps, but I think you'll see our steps harmonized, and our enormous overlaps are going to be in the metro New York reality, from New York City into the northern and northeast counties in New Jersey that have been hit the hardest, have been crushed. As I said, with almost 6,000 deaths, every county in our state has fatalities, but the bulk of them are up there. So you're going to see a deep amount of coordination. Again, not necessarily exact lockstep actions, but coordination on schools and norms as it relates to testing, as it relates to what a restaurant or a bar should look like, et cetera. So far, it's been very productive. And these states have been very good to work with. We're the densest state in America, in the densest region in America. So this stuff is important, and I'm happy we're a part of it.
Governor, could you see separating the population, if you will, in New Jersey that commutes into New York City and uses public transport from everybody else who effectively is driving to work and driving their kids to school? Because clearly, from a risk perspective, it's the public transport. It's getting into a city where there's obviously more surfaces, more ability for the virus to spread. And how do you sort of break that dynamic? Because even if you have a parent who's going into the city, taking a bus into the city, taking the train into the city, then going back and forth and then coming back out to New Jersey, that's where the risk gets presented in a way where of course, New York City makes all of this that much more complicated. Yeah.
I mean, all considerations are on the table, without question. And how we go about that, we not only have a regional council that I mentioned a minute ago, but we're going to announce a council that is advising us explicitly for New Jersey matters within the next day or so. And those are the sorts of issues and questions we're talking about. We're not necessarily unique in any respect here, but the three communities, and by the way, there's a lot of overlap in these communities that have been crushed in terms of sickness and fatality, are older folks in our state, folks with coexisting healthcare challenges or comorbidities, and folks in long-term care facilities, without question. And again, in many cases, that's an overlapping of the same individuals. But trying to find a way to protect them is going to be paramount. And there is an element there, without question. We are part of the Metro New York saga here, and that includes the 6 counties in our Northeast that contribute the most amount of commuting in and out of New York, and how we handle that will be a big piece of this, without question. What the answer is, I'm not sure yet at this point, but without question, that's one of the challenges we've got.
Governor, I realize you have to go. A very quick last question for you. We spoke with the CEO of LabCorp last week, who is talking about these new in-home tests that they can now do for coronavirus. It's not legal here in the state of New Jersey. Is that something you're considering looking into and changing, perhaps?
Yeah, I mean, we're looking on testing. We're looking at everything. LabCorp has been great. It's one of the processing firms that we've leaned on most heavily. We need to at least double our testing capacity. Rutgers has got a very promising saliva test, which we believe and they believe can be scaled. Again, LabCorp, BioReference, Quest, other players in here. We're talking to everybody, including the White House. We have some amount of optimism that we'll be able to see a big uptick in our testing capabilities literally within the next month.
Governor Murphy, thank you for your time today. We truly appreciate it, and good luck in the rest of your battles with this.
Thank you very much.
Thank you, Becky. Coming up, what to expect from a huge week for tech earnings. Reports are due for all of the FANG companies except Netflix, and investors are hungry for any and all updates relating to the impact of the coronavirus. RBC's Mark Mahaney is going to join us to talk about what to watch for. But up next, news just out of General Motors. The company is suspending buybacks and dividends. We're going to talk about it right after the break.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Whenever you're unsure of what to play next, head to the homepage and discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage. In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
They say singing can help you remember things, so here's some tips for parents out there during these tough times. Number 1, make sure your kids wash their hands for 20 seconds after they've coughed or sneezed or been outside. 2, virtual play dates. Social and physical distancing can help save lives. 3, tell them they're safe and show your love and pride. Yes, we'll get through this together. Find out more at coronavirus.gov. A message from the CDC and the Ad Council.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic Game Replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with it, over to Reese for 1, back to Hodges. It gets away from him, Ferris trying to go to second.
It's on demand, it's free, and it's only on TuneIn. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn.com.
Welcome back to Squawk Box this morning. We have some big breaking news that just crossed the tape from General Motors this morning on its dividend and buybacks. Phil LeBeau joins us right now. Phil.
GM is suspending both its dividend as well as its share repurchase program. Take a look at shares of General Motors. Not a huge surprise here. This is all about preserving as much cash as possible, similar to what we've talked about with other companies, other industries. The automakers now, as they sit there and they look at, we're going to have basically no production in April, limited production in May. We've got to save as much cash as possible. So General Motors, its annual share, or its annual dividend, I should say, $1.52 a share. They're going to suspend that. It's also dropping or suspending, I should say, its share repurchase program, also extending a revolving credit facility for $3.6 billion. And guys, we've heard about this time and again. This is all about preserving as much cash and having as much liquidity as possible as you try to deal with the impact of COVID-19. Becky, back to you.
All right, Phil, thank you very much. When we come back, we'll be talking markets with BlackRock's Global Chief Investment Strategist. The futures this morning are pointing to a higher open. Dow futures up by about 225 points. We've been roughly there through most of this morning. S&P 500 up by close to 30 points. The NASDAQ up by 102. But look at the opposite fortunes when you check out the price of crude oil, specifically with WTI. WTI is down by 23% this morning, all the way down to $13 a barrel. The sad state of the energy industry claiming another victim over the weekend. Driller Diamond Offshore filing for Chapter 11 bankruptcy protection yesterday, blaming crumbling demand for its services. And of course, this oil picture that we've been watching tells you that entirely. A reminder for you, you can always watch or listen to us live on the CNBC app. Stay tuned. Squawk Box will be right back.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Get a bit cloudy for you. But now, there's the Dell Technologies Cloud. Powered by VMware. A single hub for a consistent operating experience across all your clouds. That should clear things up.
When allergies attack, the excitement fades. Allegra helps you say yes with the fastest non-drowsy allergy relief. For 24-hour relief from your indoor and outdoor allergies, say yes to life's possibilities. Allegra, live your life, not your allergies.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM-insured municipal bonds deliver default protection, value preservation, and a durable rating. BAM. Build America Mutual.
Who's eligible for a stimulus check? It's based on your 2018 or 2019 tax return. If you're single and earn $75,000 or less, you could be eligible for a full $1,200 payment. Heads of household earning $112,500 or less could also get a $1,200 payment. If you are a married couple filing jointly and you earned $150,000 or less, you could receive a $2,400 payment. Parents could also get a $500 payment per child.
Welcome back to Squawk Box. Show you the futures right now on this Monday morning. Looks like we're going to open up higher, about 247 points higher on the Dow. S&P 500 up about 31 points higher, 32 points higher there. The NASDAQ up about 104 points higher. Let's also tell you about what's going on with Tyson Foods, because it's out with a warning for consumers this morning, taking a full-page ad out in the New York Times and the Washington Post that the supply chain is breaking, it says. Chairman John Tyson said the closure of meat plants means that millions of pounds of meat will disappear from supply chains. He said there will be limited supply in grocery stores until the plants can reopen. And of course, we heard about the spread of COVID at some of those plants. So keep your eyes on this story, because it's not just a meat story, but something that I think people are concerned about across the wider supply chain over the coming weeks and months. Coming up when we return, a lot more on Squawk, what we're likely to hear and what analysts want to hear from America's biggest tech companies when they publish quarterly results this week. We'll talk about it. Microsoft, Apple, Amazon, they're all set to report before Friday. Their combined market cap, $4 trillion. Stay tuned. You're watching Squawk Box on CNBC.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app. Keep up with everything happening in the wild world of pro wrestling with the TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
If you've used TuneIn much, you probably already know how to favorite your top stations and podcasts for quick access. But did you know you can organize your favorites too? Under your favorites page on the TuneIn app, hold and drag the stations to rearrange the order to your liking. It's that easy.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Emergency financial assistance. Head to cnbc.com/select for the latest on relief for loans, mortgages, deferments, and more. CNBC Select. The stories you need for the smartest way to handle your credit.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn. Did you know with TuneIn's local radio feature, you can stream live FM and AM stations in smooth streaming quality and discover local news, talk, and music stations you didn't even know existed. Navigate to the local radio section under Browse to listen locally on TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone,
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the road
Price today.
Welcome back to Squawk Box. We are getting into a huge week for tech earnings, including from Alphabet, Google's parent company, Facebook, Microsoft, Amazon, and Apple. And this morning, the Wall Street Journal is reporting that Apple is delaying mass production of its 2020 flagship iPhones by about a month, though the company is still reportedly still pushing ahead with plans to release 4 of those iPhone models later this year. It is a super cycle for them, with 5G coming this fall. At least that's the expectation. Mark Mahaney, lead internet analyst at RBC Capital Markets, joins us right now. Our own John Fort, co-anchor of Squawk Alley, joins us as well. I'll start with you, Mark, as you think about these different companies, that they're all coming from different directions. So, you know, a Facebook and Alphabet, you're going to be hearing an advertising story, I imagine. An Apple, for example, is going to be and a Microsoft will be a very different kind of story.
That's true. I think the expectations are going to be lowest for the ad names. And the question is going to be, how bad will the June quarter outlook look. I think the market's expecting them to be able to talk about trends down 10 to 20% year over year. This will be their first negative revenue growth quarters, i.e. revenue decline quarters ever. At the other end of the spectrum, the really high expectation stock for this quarter is going to be Amazon, where the market's looking for an acceleration in both core retail growth and in AWS growth. So this is going to be a week of haves and have-nots. Expectations highest for Amazon, lowest for Google and Google and Facebook.
Right. Hey, John, what do you make of this Apple news? How much should we take away from it?
Well, Andrew, I think in a way it's a best case scenario. I mean, at least if this report is to be believed, Apple's still on track to produce 4 new iPhone models in this kind of cataclysmic global crisis. Now, we've heard from a number of companies, including from Satya Nadella over at Microsoft just over a month ago here on CNBC, that the challenge has shifted to a demand challenge rather than a supply challenge. So right now, there is the expectation that they should be able to build new devices and new technology in Asia. The question is, how much demand is there going to be in places like Europe, the U.S. for that when people haven't been able to go to stores? The fact that Apple did launch the new iPhone SE to what seems to be decent demand over the past few days, and that is shipping. And the fact that, hey, even if they're not expecting the same kind of demand, they're still planning to deliver a volume of iPhones. I think investors, at least at this point, should see that as being a positive.
Hey, Mark, how much can we use Facebook, for example, and Google or Alphabet as a proxy for the rest of the economy? And what can we read into that, given that it's an advertising-based business, given that they have tentacles into so many other companies and so many businesses? And what can we read into those numbers as a result?
Well, Andrew, I liked your setup. I mean, if there are two companies that have got these two companies, Google and Facebook, have probably got about as good of a read into consumer mindsets as any other companies in the world. I mean, you can just think about all the search activity that occurs on Google. Google knows exactly what people's intentions are, at any one point in time, and that can always change. But the visibility they have, I think there's a real opportunity for Google to enlighten everybody about what's happening in different markets around the world as people come in and out of home lockdown situations. So I think there's an enormous amount of insight they have. My guess is that they're going to first see this real fall off, at least in ad buyer demand, a real rise in consumer anxiety. And then it'll be an interesting in the back half of the year, because, we're focused on the quarter, but the back half of the year is when we're going to start seeing the real impact of all these layoffs on these companies' core businesses. And so they should have some insight into that as well.
Well, that's what I was going to ask you in terms of, though, for investors out there who are trying to understand whether they should own these particular stocks. Amazon may seem like a no-brainer, though. I don't know how you feel about the valuation, but when you look at the different valuations of these stocks and whatever your expectation is for the duration of this and whatever you think a recovery looks like, how do you line them up?
Yeah, so what we did, Andrew, is we laid out two baskets. We have a defensive basket and a rebound basket. If you think this COVID recession crisis is going to be enduring well into 2021, you want to stay defensive. You want to stick with names like Amazon, Netflix, Akamai, that's also reporting tomorrow. If you think there's a reasonable ground for a strong rebound kind of in the end of this year, you go to the rebound basket. Facebook, Google, even Booking.com, names like that, and Uber. So it depends on how long you think this crisis is going to last, and that's hard for me to know, hard for anybody to know. But I think I know the baskets that you want to play under either of those scenarios, and maybe you hedge yourself by taking shares in both baskets. I mean, these are good, high-quality names there. You can buy these stocks on sale. You're going to make money, over the next 2 to 3 years. Amazon's not on sale now, but Facebook and Google, I think, are, particularly Facebook.
Right. Hey, John, one of the questions is you think about the enterprise customer, Microsoft, the AWS side of Amazon, for example, and everybody thinks that none of these businesses thus far have been touched in any meaningful way. So many of these businesses are online. They're all in the cloud. What are you hearing when you talk to executives at these companies, though, about the longer term, when you start to think about some businesses that are going to make it and some businesses that won't, and what that means to the enterprise customer and the enterprise base of their business?
Well, Andrew, it's interesting because we're getting lots of different reads on that. We just had Intel earnings last week, and Bob Swan over at Intel told me that cloud demand remains strong because people are really relying on that to get so much done that they used to get done in physical locations. So right now we have a surge in certain types of cloud usage that I think is making up for a downswing in other types of enterprise usage that would be running through the cloud. And you can imagine all the retail locations that, if they were operational, would be storing data in the cloud about in-person transactions that are not happening. So I think that there is a bifurcation. IBM said that especially when it comes to software, certain types of enterprise transactions really ground to nearly a halt in March, and they're unclear about how that's going to continue. But at the same time, Intel was able to give a projection and guidance and how its data center group was going to do based on demand there. So I think investors really have to look at what types of business these companies are doing. When it comes to Microsoft, they're probably going to say that their Xbox Live business was particularly strong. Satya Nadella has told us at CNBC that the demand that they've seen there from people staying at home is similar to a holiday season. But then at the same time, there are certain types of enterprise software that you should expect from Microsoft to have slowed down. How in the second half does that start to balance out? I think that depends on some things that the companies don't know yet, such as people returning to work, companies gearing back up to a regular level of operations. And that's where we've seen companies not willing to really give guidance for the second half for those kinds of reasons. So we'll be listening to Microsoft and others and just how they talk about those sorts of issues as they're reporting earnings, as they're giving guidance, or perhaps the justification for not giving guidance, Andrew.
All right. John, thank you. Mark, thank you. Both stay healthy and safe. Thanks, guys. Becky, over to you.
All right. Andrew, thank you. When we come back, we'll get Jim Cramer's first take on the markets this week as we approach the opening bell. Futures so far have been higher all through the morning. Right now, Dow futures up by about 210 points. NASDAQ up by almost 100. The S&P up by 28. Stay tuned. You are watching Squawk Box right here on CNBC.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed and lay down.
Search the Woj Pod to listen.
With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play,
All business.
Well, investors are racing, I guess, or at least looking with great interest at these corporate reports that are due this week. 150 of the S&P 500 companies are set to report, along with more than a third of the Dow components. And this could be when Wall Street really starts to get a picture of the early economic damage from the pandemic. Joining us now is Mike Pyle, Global Chief Investment Strategist, BlackRock. Mike, it's good to see you. I looked over to some of the things you're doing at BlackRock. All right. Stocks, global stocks, neutral. Global government bonds, neutral. Cash, neutral. But credit, you do have modestly overweight. And within the stocks, you're overweight U.S. equities, which is kind of interesting, and you're looking for quality. But I think cautious, or at least neutral on most asset classes, would describe your viewpoint at this time.
Thanks. Yeah, I'd say a couple of things. First, I think this is a moment of extremely heightened fundamental uncertainty, as we've been talking about around the corporate earnings season, the economics, the pandemic, what have you. But there are a handful of themes that we think will guide investors through this, and you had articulated them. Up the capital structure, credit over equity, up in quality. That's true across asset classes, including high-quality equity exposures, including places like the United States over the rest of the world, and then really seeking out strong policy backstops, in particular of the kind we've seen in the United States and to some extent in China.
But Asia, you're overweight in terms of equities as long as it's not Japan. Why?
We think that really goes to that policy theme. We think that the policy capacity that China and the United States have to throw at this crisis is just much different in scale than what we're going to be able to see from Japan and also Europe. And that, along with the underlying kind of quality and resilience of a lot of those names in the U.S., but also to some extent in China, leads us to prefer the U.S. and those non-Japanese Asian exposures, and particularly those rooted in China, over other world exposures.
But will you go down in quality for credit? Do you like corporate bonds more than U.S. government bonds?
Yeah, so we have a very strong preference right now for high-grade credit in the U.S. and Europe. Also, given the degree, again, of the ECB policy backstops there for peripheral sovereigns, Italy, Spain, we think there's a strong backstop there, and that offers a strong rationale for those. U.S. high yield is kind of right at the cusp. We prefer it. We think it's right at the edge of those policy backstops. And so it's one of those places where we do think stepping down in quality just a bit makes some sense because of what the Fed has communicated. But we recognize that that's at the periphery of the themes we've been articulating.
Why not Europe? European equities. It's just a kind of a problematic. I've always had a trouble with figuring out how you run the EU with all these disparate economies and no central fiscal authority. But you don't like European equities because of policy there? Because they seem, at least the countries seem to be emerging maybe before the United States in terms of the pandemic.
Yeah, so I'd say three things. One, the composition of the European equity market, much more tilted towards value names that are cheap, names that are exposed to more industrial, export-oriented parts of the economy, financials. The U.S. equity market, much more up in quality, much more exposed to those types of businesses with business models that are going to be resilient. But then secondly, you also highlight the top-down point, which is just Europe historically has not been able to muster the same degree of policy support that we've seen in the U.S., China, elsewhere. And that sort of bottom-up and top-down leads us to think that Europe is going to be a challenge exposure looking ahead.
Do you have an overall viewpoint about just, let's say, the S&P and what kind of range we see for the next 12 to 18 months?
So I'd say there's a huge tug of war right now underway between, on one hand, a set of fundamentals around the virus itself, around the economy, around corporate fundamentals that have just much bigger uncertainty around them than we've ever seen historically. On the other side, we're seeing policy support that is also historically unprecedented. I think to our way of thinking, the key thing that we need to see over the coming period of months is whether or not policymakers continue to insert significant stimulus, both on the monetary side and the fiscal side, to continue seeing the U.S. through what could be a pretty long road back to normal. If that happens, that's the type of signpost that we're looking at that suggests that the S&P is going to be something we want to be constructive on over the medium to long term.
You certainly don't think cash is trash either. Even though you're neutral, you call it a robust buffer against what could happen to correlated assets like stocks and bonds, I guess.
Well, it certainly has been, and that is that we expect to continue to be the case moving ahead. But again, I would just highlight that, at the end of the day, we think this is an uncertain environment, but still one where some really thoughtful, targeted themes around being up the capital structure, being up in quality, seeking out those high-quality policy backstops are really going to pay off for investors over the next 6 to 12 months and beyond.
All right, Mike Pyle, Global Chief Investment Strategist at BlackRock. Thank you. And we'll hope to see you again soon. Thanks, Becky.
Thanks for having me back.
You're welcome.
All right, let's get over to CNBC headquarters. Jim Cramer joins us from there now. Hey, Jim, earlier this morning, we were speaking with Michael Rubin from Fanatics, and he was talking about how he thinks even when businesses open up again, you're going to see probably 30% decline in retail for the rest of the year and 40 to 50% down in terms of people who are going to restaurants, just because he thinks there will be a certain population that's going to be too scared to come back.
I think that's a very good read. I question whether it's going to be 30 for retail and not lower. I think that there are a lot of retailers that will not be able to get a break from the government. I also think that the problem for retail is Amazon, it's Walmart, it's Target, it's Costco, and you can't compete against them. It's like when Walmart first moved in and wiped out all the mom and pops. Now Amazon has wiped out everybody other than the ones that I just described. I think when it comes to restaurants, there'll be a reluctance unless there's half the seats. But if you take out half the seats, there's probably, 10% of the restaurants that can survive? I think we're going to be in a new world with restaurants. Unless you can double your price, which is very hard to do, you'll probably go under. And the PPP can give you as much money as you want. But in the end, these are businesses that are no longer viable. And I think that people have to recognize that they've become labors of love. There'll be far fewer restaurants, so maybe they can raise prices, but it's a very different world that's coming. Unless you think that all this is nonsense and you're immune and that we in New York are completely out of touch with the rest of the country.
Yeah, we spoke with the governor of New Jersey earlier today, too, and I was actually surprised. He sounded a little more optimistic than I had expected just in terms of whether they'll actually be able to open schools before the end of June. He seemed to indicate that is a possibility that's still there at this point, but he also admitted that they need far more testing than we're doing at this point because right now 43% of the tests that New Jersey's giving are still coming back positive, and that just is a huge indicator that there's not enough tests out there.
Right. I mean, my old friend T.J. Rogers has a very good op-ed piece in the Wall Street Journal talking about Sweden and just, they open the schools, and the pediatric numbers are very good. I mean, we all know that, but I think we have a CDC that actually knows things and has good plans that are completely obscured by Washington and by the administration. And I think that there's really good data that shows that there are certain age groups that really shouldn't be fearful. And then there's other age groups that should be quarantined. But that's not the way that the president has played it. And I think that we're coming to an end of the era where we're ignorant. And I think that that's going to be because the organizations like the New York City Health Department and like CDC are going to be allowed to tell the truth, which is quite different from what we've been hearing. It's a very different change coming.
You again. It is, yeah. We'll see you again in just a few minutes.
Absolutely.
Good to see you. By the way, we want to tell everybody tonight on Mad Money, don't miss a CEO double feature. The heads of NVIDIA and Betterment will both be joining Gem starting at 6 p.m. Eastern time. So stay tuned. Squawk Box will be right back.
Did you know with TuneIn's local radio feature, you can stream live FM and AM stations in smooth streaming quality and discover local news, talk, and music stations you didn't even know existed. Navigate to the local radio section under Browse to listen locally on TuneIn. In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app. Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. With the NHL season temporarily on ice, now it's a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey, it's Jacoby here from Jalen and Jacoby. And after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air. And they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
Parker.com. Welcome back to Squawk Box this morning. Take a look at shares of Boeing right now, the aerospace giant holding its annual meeting. It's happening today. It's happening virtually, as so many of these meetings are these days, ahead of the first quarter results due to be released Wednesday morning. Now, Boeing is also pulling out of its more than $4 billion deal to acquire an 80% stake in the commercial jet business of Brazil's Embraer. Boeing said that the two sides had failed to agree on final terms by a deadline, but Embraer accusing Boeing of wrongfully canceling that deal. Before we go, I want to take a quick final check on markets. We're about a half an hour before the open on this Monday morning. If you look to see what's happening here, Dow would open up higher, about 194 points higher right about now. S&P 500 looking to open about 27 points higher, and the NASDAQ looking to open about 95 points higher. Let's show you what's happening in Europe real quick, and then show you the oil boards because so many people are focused on WTI. We do have green arrows across the board with the FTSE in Italy, by the way, up over 2%, 2.2% as they try to reopen their economy. And quickly, WTI is at 12.70. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber live from separate locations. Futures are green to start the busiest week of earnings season. We'll get Boeing, Caterpillar, Microsoft, Apple, Tesla, all headed our way in the coming days with a Fed statement on Wednesday and more states, as Andrew said, set to reopen beginning today. June oil down 21. Jim, as the space between stocks and crude remains exceptionally large.
Look, I think the crude futures distinguish themselves as being, let's just say, totally disingenuous. The idea of what happened last week with the minus 37 had to do with the fact that there's a financial instrument, a couple of financial instruments that are just wrong, and they are broken. We don't regard things as broken because it seems almost impossible that something could break. But the future that you see and the actual prices are very different, particularly in the out years. And I think what's going to happen is this has to go to zero again because we haven't any more space. I had Herb Jorn Hansen, who's the CEO of the largest tanker company, North American Tanker, on Friday, and he said, look, there's no room. So why should this number not go to zero? It should go to zero faster than it did last time. So we look at this and we wonder
any chance
who's doing it, but it goes to zero.
Yeah, any chance that it doesn't because we will begin to look for tiny rebounds in gasoline demand as some of these states open?
Well, I think that's certainly a hope. But I also know that there are times in life where people know that there's an instrument that is faulty, and they can shoot against that instrument and bury these people. I mean, there is this financial problem. The people who are behind the USO, they are financial people. And so if you're a real person or you're a large contractor, a large player, and I'm going to have this tonight in my show, they can wipe out the USO. And I think that's been what's going on. I mean, it's not a conspiracy; it's a reality. When you have an organization that can't take delivery, well, you should crush that organization every time, and that's what will probably happen. The people in the USO are naive; they're rookies, and I wish him the best of luck.
Well, we're going to keep looking at this, Jim, of course, but we got to keep in mind that as a percentage of the S&P, energy companies are extraordinarily small at this point. I mean, this price is certainly a reflection of the lack of, it does at least give you some signals in terms of the world economy right now. But you can't say much when it comes to what its real impact should be overall, I guess, other than on that, but specific to the S&P.
Right. Well, there are two economies going on. There's the economy that does well. I did a lot of tracking this weekend. There's $11.4 trillion in companies that do well out of a total of about $25 trillion. And I think that the reason why people are so, let's say, confused about why the market can go up is exactly what you said, David. The parts of the economy that should have been hurt have been. They've been wrecked. And the capital, the size of what's left is minuscule. So what people think of as the stock market, particularly if they're in S&P 500, it is not the stock market anymore. There's a downgrade today of Caterpillar. But Caterpillar's not really part of the equation anymore. It's a big company, but it's not what this index that I've designed, the MAD index for COVID, but also about the S&P is about. I think we got to be more realistic and recognize that the financials are trashed. When you pick up a piece today and says the credit cards, the bedrock of what these companies make, people aren't paying. And we know rent's not being paid. I don't know how you own a financial. So, I mean, there's parts of the economy that I think you can feel great owning. Procter & Kimberly, Clark demand. And then, what do you do with Bank of America? What do you do with a great American company where suddenly people aren't paying? And that I haven't been able to figure out. I don't know what to do. It's not like Carnival Cruise, which got a terrific bailout by the Federal Reserve. We learned this morning. And I thought that piece was a disgrace. But you know what? We're in an era, David, where nothing's a disgrace. Everyone knows. But no one likes to say it because then suddenly you're lamestream.
Gets you back to the PPP program, of course, the second allocation of which is going to begin today. But, to your point, Jim, if you sell anything to the consumer directly other than from a supermarket shelf.
The station you're listening to is experiencing technical difficulties.
You are having a rough go of it. I mean, every banker that I speak to, as you know, sort of the world that I've occupied for a long time now, who are advising clients, they're not talking to them at all about M&A opportunities. No. They're talking to them still about their balance sheet. Even those companies that you may think are looking fine or have already raised capital or pulled down the revolver or suspended their dividend, they're still just thinking about survival because it's what they're seeing in front of them that worries them so much. And I think it's important to keep that in mind as we watch the equity markets here, perhaps only going to be down, 15% from the high when we open today. Nonetheless, you got a lot of companies that are not looking towards the future with anything in terms of any sense of brightness.
All right, but let's say you're the Federal Reserve. Do you want Macy's to go under? Is that more important or less important than Carnival? In Carnival, which was a principal, purveyor of COVID-19 that's killed a lot of people. Macy's hasn't killed anybody. Should we give Macy's a loan? Should we help them out? Or are we limited to companies that run by Mickey Harrison? I don't know. I mean, I've gotten quite cynical. When I read that Carnival piece, I think your eyes glaze over now because everything's so cynical. But I wonder why Carnival gets the backing of the Federal Reserve after being an actor that I think we could all question, and Macy's, which does fireworks, which is more dangerous.
Yeah, Jim. I mean, those are questions we'll be wrestling with long after the peak of this crisis is over. Your point about the constituencies in the S&P, though, sort of remind me of Goldman's note from last night, David Kostin. The 5 largest names are now 20% of the index, the highest concentration in 30 years. And David's point is that in their words, narrow breadth is always resolved the same way, and that is a drawdown because the 5 players that are killing it can't do it long enough to maintain the overall sentiment regarding earnings and valuation.
I love Costin, I don't like to play the other side of Costin, but FANG is what moved most of the market. And so I disagree with his analysis that in the end it ends badly because what happened is there is no end. There's no end to what. I don't think Alphabet's going to report a great quarter. What happens to Alphabet? They report a lousy quarter. They give a terrible conference call. They tell you how bad things are. And then you look at it a month later and it's higher. I mean, that's the notion of FANG. I mean, Netflix reported a number that, frankly, people didn't like, and it's hanging in there. That's not unusual during this reporting period. IBM reports a quarter, stock's at 122, goes to 116, now it's at 125. There's a lot of instant judgments that are then overturned. But when it comes to what Costin's talking about, I mean, FANG is set up perfectly for this year. I mean, it shouldn't be, but it is.
So then 2950, 3K. I mean, at the margin here is not out of the realm of possibility.
No, it should be. I mean, there's a piece today in the Wall Street Journal that talks about, well, you better be worried about Amazon. Well, what are you supposed to be worried about? Too much demand. When you have too much demand, then what happens is the analysts are going to look through that. This is very much like a Tesla problem. There's a piece put out by Adam Jonas, who loves to write about Tesla. And this time he's saying it could be 500, it could be 1,000. It could be a straight flush. It could be two pair. I mean, these things are hard to understand. But the fact is that Tesla is something he says we will look through. There's a lot of companies, and I've got lots of research here, and everybody wants to everyone wants to look through the bad, and everyone wants to say, look, if it's got a demand, it's going to go up in the second half of the year. I don't think that's wrong. I mean, the most negative piece I saw this morning was United Parcel. And it's too bad because I think that Carol Tomei is going to do a terrific job. And that's one that I actually want to buy after the quarter. But for the most part, the analysts are saying, hey, you know what? The bigger you get bigger, and the Gap stores are just going to dwindle. Gap, which refinances 5%, but 8%. I mean, that's not doable. It's not doable.
But what is the unemployment number going to look like in June? How many people are we going to have out of work? And then let's assume 6 months later we cut that in half. Aren't we still going to have an unemployment rate the likes of which we have rarely, if ever, seen in this country?
Great Depression numbers. I mean, if you get more than 20%,
we're at 26 million now. We're going to continue higher. One would expect for the next month. Let's say.
Right. Well, I mean, the difference is that
not,
Great Depression.
I think that's a fair expectation.
Great Depression, we had 25%, but we had no unemployment insurance. Here, the unemployment insurance is higher than what you can pay your employees.